Welcome back to Asean Newsroom, and here are the economic news of this morning. Burma received a record of $20 billion in foreign investment in the past year. The country has said that dropping previous pledges for the isolated nation. The BBC reports that the amount compares with just $302 million in 2010 and a total of $16 billion for the prior 2 decades combined. Neighboring China was the biggest foreign investor, most of which will be invested in power projects. The country, long ruled by military junta, held election last year for the first time in 22 years. The figures suggest that the elections may succeed in opening the economy of the country for years under sanctions over its human rights record. China invested $8.27 billion in the year to March 2011, followed by Hong Kong with $5.39 billion and Thailand with $2.94 billion, according to the Ministry of National Planning Development. Military-backed parties won by far the largest number of seats in the November polls in Burma, officially known as Myanmar. Under the 2008 constitution, 25% of seats were reserved for the military. Opposition groups and Western nations have criticized law under which the polls were held and condemned the election as a sham. The party that won Burma election in 1990, the National League for Democracy, led by Nobel Peace Prize winner Aung San Suu Kyi, is not represented in parliament. The new president, Thein Sein, is a retired general, former prime minister, and seen as loyal to junta leader General Than Shwe.
The European Central Bank President Jean-Claude Trichet foresees interest rate increases despite turbulence in the European economy. The European Central Bank ECB has signaled that it will raise interest rates next month to 1.25%. Earlier on Thursday, the ECB kept rates unchanged for the second month in a row after increasing them in April for the first time in almost 2 years. The central bank wants to raise rates again in July to curb inflation in some of the Eurozone 17 member states. But it has to balance that against the need to leave rates low to boost growth in the nations such as Greece and Portugal. In his press conference, ECB President Jean-Claude Trichet pledged to exert strong vigilance on inflation, a signal to the markets that rates will be raised in the next meeting. He adds that it means that they are in a mode where there might be in the next meeting an increase of rates. However, Mr. Trichet added that since the ECB's May meeting, there has been continued upward pressure on overall inflation, mainly owing to commodity and energy prices. Inflation in the Eurozone was 2.7% in May. The ECB increased its forecast on inflation for 2011 to 2.6% from its previous prediction of 2.3%. The bank also increased its economic growth forecast for 2011 to 1.9% from 1.7%. The most recent data confirmed the positive underlying momentum of economic activity in the euro area, Mr. Trichet said. The Eurozone economy remains fragile, with some countries grappling with high unemployment, huge debts, and government spending cuts.
The governor of the TAT said that investment in the Thai tourism sector this year is estimated at about 260.3 billion baht, mostly in hotels, resorts, and theme parks. Surapon Sawetseni, the governor of the Tourism Authority of Thailand (TAT), said foreign investors were demonstrating their confidence in the kingdom with major developments. Thailand's Board of Investment, or BOI, is offering large incentives including tax breaks, streamlined customs procedures, and licensing for green investors. Surapon said Thailand's strategic location and position as gateway to the Greater Mekong Sub-region, or GMS, made it a logical investment. The country continues to strengthen transport ties with other GMS countries. Bilateral and trilateral marketing campaigns will also help boost visitors to the region. Moreover, Chiang Mai has been selected as a pilot city to promote green tourism in GMS countries. Although last year was a bad one for the general travel industry, it turned out into Thailand the best ever. with arrivals surpassing projections and coming in at 15.9 million visitors, 12.6% up from the previous year. The positive trend has continued this year with growth of more than 10% every month. From January to May, international visitors' arrivals to Thailand reached 8.2 million, up 24.4% compared with the same period last year.
The 10 ASEAN member countries have much potential to offer to investors despite the craze about China, as the region is generating higher profit for Japanese companies than China. For 2009, profits from Japanese companies remitted to Japan from China totaled 587 billion yen, while those from ASEAN, excluding Brunei, Burma, and Cambodia, were 757.8 billion yen, which means that the 600 million people in 10 economies have tremendous potential and still have market opportunities for Japanese companies to be established or to be relocated, according to ASEAN Secretary General Surin Pitsuwan. East Asia and ASEAN have been given a role as a center connecting the region, Dr. Surin added at the recent Future of Asia conference in Tokyo.
Thai banks are monitoring investors from Japan that have applied for Board of Investment privileges in the hope of providing loans to support the company's plans. The Board of Investment, or BOI, recently reported that it had received 725 applications with a combined project value of 208 billion baht in the first 5 months of the year. Small and medium-sized enterprises submitted projects worth more than 5 times the amount in the same period last year, while applications for foreign direct investment, or FDI, expanded by 64%, with Japan taking the lead. Chansak Phongphu, Vice President of Bangkok Bank, said that 221 projects worth 57.48 billion baht of Japanese companies might require local funding to support their investments, where the bank will focus on those companies, giving them financial housing to their demand. He added that though some companies will not require financial support or their preference of non-local banks, there are still prospects of some clients that will want the bank's support. Instead of pricing, Bangkok Bank would focus on the services it can provide to Japanese clients. Moreover, the sustained monitoring of BOI information will help local banks figure out the direction of foreign investment. Chansak insisted Bangkok Bank's liquidity is a solid source of loan to foreign investors. Apart from Japanese investors, Chansak and the bank acknowledges a trend of investment in renewable energy due to the country's power development plan, which requires a huge future supply level and means that larger power producers will be investing more. Bangkok Bank has granted loans for 4 power plant projects so far this year. The bank lending to corporate customers are estimated to grow by 56% this year, with a second half acceleration following expected growth of 3% in the first 6 months, the Vice President said. Wasin Wanitwaranan, Executive Vice President of K-Bank, said Japanese investors in the automobile manufacturing sector were leading many new Thai projects. The bank is also monitoring the planned foreign investments by Japanese companies with the test of Thai markets by trading with local companies in order to create confidence before deciding whether to set up in a country. Wasin said Japanese companies would then consider joint ventures and/or mergers and acquisitions as the next step when they are ready to invest overseas.
Thailand's stocks dropped on concern that a July 3rd election will fuel political conflict, and the benchmark index sinks as much as 10% below the recent height. The SET index fell as much as 1.6% to 998.39, which exceeds the 10% slump from the April 21 high that some investors term also called correction. The gauge, Asia's biggest decliner, sank 1.1% to 1,003 as of the 12:30 p.m. local time break, before closing at 1,016.85. Overseas investors have increased sales on concern the election will revive political tension that has destabilized Southeast Asia's second biggest economy since a coup in 2006. The vote will pit Prime Minister Apisit Vejchajiwa's Democratic Party against the Pheu Thai Party led by Yingluck Shinawatra, the sister of deposed Premier Thaksin Shinawatra. Andrew Stott, a strategist at Kim Eng Securities Thailand PCL, said in a Bloomberg television interview that the biggest fear right now going on in Thailand is that Thaksin's group is going to get back to power again. He said the fear of that and the chaos it causes is what's causing the market to drop. According to data from the Stock Exchange of Thailand, overseas investors yesterday sold 6.31 billion baht more of Thai stocks than they bought. A fifth straight day of withdrawals and the biggest sell-off since January 21st. That boosted the total outflow in June to 13.9 billion baht from net sales of 16.7 billion baht in May. Credit Suisse Group AG and Goldman Sachs Group Incorporation downgraded the nation's equities this week on concern over the election, inflation, and increased valuations. The baht lost 0.2% to 30.45 per dollar, the weakest level since May 27th. Investors may want to avoid Thailand for now, and the baht sees downward pressure through foreigners' equity sales. According to a Dusit poll that surveyed 4,694 people from May 23rd to May 28th, Pheu Thai would win 43% of the vote if elections were held now, comparing with 37% for the Democrat Party. Pheu Thai is a successor to parties loyal to Thaksin that won the past 4 Thai elections.
Getting China's support to be an IMF chief seems to be crucial as French Finance Minister Christine Lagarde seeks a backup from the world's second-largest economy. French Finance Minister Christine Lagarde said she is very positive about her talks to Chinese authorities. Her visit to China to meet Central Bank Governor Zhu Xiaoshuan, Vice Premier Wang Qishan, Foreign Minister Yang Jiechi, and Finance Minister Xi Suren was an attempt to seek support for her to head the International Monetary Fund. Lagarde is one of the likely candidates to take over Dominique Strauss-Kahn's former seat as the IMF head after he was charged for allegedly sexually assaulting a New York hotel maid 3 weeks ago. The other declared candidate is Mexican Central Bank Governor Agustin Castens. China, however, has shown no sign of supporting either candidate, saying it wants the next IMF leader to be selected through democratic negotiation.
2 things on which we agreed. Number 1, that the selection process for the managing director of the IMF should be open, transparent, and the selection merit-based, irrespective of nationality.
China and other countries such as India have called for an end to the convention that requires the head of the Washington-based International Monetary Fund to be a European. However, they have not together with a common candidate.
More international news on WTO and the South China dispute after the break.